Hello, very good morning to all and happy Friday. Very good morning. This is Kelvin here again. Welcome to today's Daily Dose of Market Insights and happy Friday. Today will be the 20th of September 2024. So before we start our Daily Dose of Market Insights, let's have a quick look at the disclaimer first. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. As well as any forecast, prediction, projection in this presentation is not necessarily, excuse me, indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so just give me a minute, so just to make sure that everything is okay on my screen. All right, so everything is good, excellent. So now, before we jump straight into that usual short-term intraday technical outlook of the broad-based cross-asset classes, let's have a recap what has taken shape yesterday in terms of news flow, economic data releases, events, and as well as the various intraday movement on the broad-based cross-asset classes. So yesterday, what we see over here is that we do see a kind of a very volatile session across the global markets. Initially, after the Fed funds rate cut of 50 basis point, the US benchmark stock indices reacted negatively and closed in the weaker footing by the close of Wednesday. But however, yesterday we see a resurgence of risk-on behavior across the board, starting from the US benchmark stock indices future, then they actually spread all over towards the start of the normal US cash market session yesterday, that means i.e. at 9:30 p.m. Singapore time. So what we could see over here is that it's actually across the globe over here. Okay, let me highlight to you all. So what we could see is that across the board, we see a very strong push up in the major US stock indices yesterday. The SPX is gaining 1.7%, the Nasdaq 100 up 2.56%, the Dow Jones 1.26%, and the Russell 2000 up 2.10%. So what we could see over here is that a very strong opening in the major US stock indices yesterday. But what we could see is that only at the second half of the US session, we do see a bit of profit taking coming back into the picture again. So there was actually a minor slide or minor profit taking towards the end of the US session yesterday, as been seen on the SPX 500, the Nasdaq 100, all right, as well as the Dow Jones Industrial Average as well. All right, there was actually a kind of a profit taking signal taking shape. And what we could see as well over here is that primarily on the SPX 500, it managed to shape a all-time closing high yesterday, because the previous high was at 5,680. Yesterday, it managed to have an all-time closing high at 5,713. And the Dow Jones Industrial Average, we know that since the start of this month, it continues to actually make a fresh all-time high. Okay, so that's actually more or less within our line of expectation as well, due to the bull yield curve steepening, the bull curve, pardon me, the steepening of that yield curve. All right, the treasury, the spread between the 10-year treasury minus of the 2-year treasury, and has this bull steepening impact, and that should potentially see the continuation of the Dow Jones continues to actually outperform the Nasdaq 100 and the S&P 500. So the S&P 500 finally managed to make a fresh all-time high yesterday, but not the Nasdaq 100 yet. The Nasdaq 100 is still lagging behind. So let's take a look at the price movement of the S&P 500 yesterday. Okay, so this was the movement of the S&P 500. All right, so I could see yesterday there was actually initially a bearish reaction after FOMC. Then after the start of the yesterday US session, this is the cash market, not the futures or the CFD. There was actually a gap up over here. Okay, taking into account of the positive earlier Asia session bullish move in the S&P futures contract. All right, so this is the cash market, not the futures or the CFD. There was a gap up over here. So this was the previous high the previous all-time high. Okay, in July. Okay, so finally it made a fresh all-time high yesterday. Right, this gap up here after trying to consolidate since 22nd of August, and there was two bearish reaction day on the 17th of September and exposed FOMC. But I want to share with you, yes, you do see a fresh all-time high, but the closing candle is very, very not so bullish, because this particular closing candle is a spinning top. Okay, a small little body with long tail at the top and long tail at the bottom. So typically like a daily a spinning top pattern. So today price action will be very, very crucial for Friday, especially also end of the week as well. So if today price action starts to actually instead close lower and come back below 5,667, so that was the previous all-time high. So it managed to actually come back down and reintegrate below the 5,667 level. Yesterday's push-up was considered as a bearish reversal day if we have a negative price reaction today on the S&P 500. Okay, so this is something I want to share with you, despite even though it's a fresh all-time high, but in terms of the candlestick movement, it's not so rosy. All right, so that's for the S&P 500. And if you look at the NASDAQ 100, all right, over here, very similar more on the NASDAQ 100 as well. So you realize that this is the NASDAQ 100, the cash market, not the futures market and the CFD market. So purely taking into account of the price action starting from Singapore time 9:30 p.m. all the way up to 4 a.m. the normal US session. Okay, this is the fresh all-time high here of the Nasdaq 100 in July. Hasn't even hit the all-time high yet because it's underperforming right now due to that, the bull curve steepening of the US Treasury yield curve, which I explained to you in my previous daily dose and yesterday daily dose as well. What's interesting over here is that there is a hesitation in this previous my swing high here of 22nd of August, which is at the 9,338 level. And you look at it over here, right? The price action of the Nasdaq 100 also very similarly, it starts to shape this kind of spinning top formation. And this spinning top formation paused at the previous swing high of 22nd of August. And so for sure, if today it starts to reintegrate back below this level at 9,556, the previous gap up level. I mean, if price action today is Friday and starts to close back below 9,556, that means yesterday is considered as a bearish reversal day. All right, given the formation of this very typical spinning top Japanese daily candlestick on the Nasdaq 100 as well. So overall, what I'm trying to share over here is that yes, we see a very strong push up in the price action yesterday, but in terms of technical analysis using the Japanese candlesticks and where the price action actually closes, it doesn't seem to be pretty much rosy given yesterday's fresh all-time high in the Nasdaq 100, not in the fresh all-time high in the S&P 500. Right, something to actually take note of for today. US trading session. And in the FX market over here, the dollar continues to actually show weakness over here. So especially right now, what we could see over here is that the dollar against the other currency continues to inch downwards. So over here, the dollar yesterday tried to actually recover much ground against the Japanese yen, but after that, after failure to break above the 143 handle level, which is our resistance level, it continues to trigger down lower and attempt to actually cover this wide gap that has been left behind yesterday on the dollar yen. So something to look out for. Why? Because in a couple of hours time, maybe about 1 hour time, we will see the release of the BOJ meeting or the BOJ monetary policy stimulus, BOJ monetary policy statement, not stimulus statement. All right, because market is expecting no interest rate hike by BOJ this time around, but the monetary policy statement will actually give rather a hawkish guidance for an upcoming hike coming into the next month meeting or before 2024 ends in December. Why do I say so? Because we do have a very, very supporting economic data that could support another hike in BOJ by BOJ, Bank of Japan, before 2024 ends, which is the release of Japan nationwide inflation data today that came up higher than expected. So the core inflation rate, that is including energy price but only excluding fresh food, rose to 2.8% from 2.7%. And if you look at the trend of this core inflation rate over here, so actually it's pardon me, it exclude fresh food but includes fuel costs. All right, so it increased to 2.8% year on year. It's the highest reading since February. All right, so notice that since April this year, the price action the price movement of the inflation rate in Japan continues to tick upwards. And if you look at the 5-year trend, okay, in fact it start to shape a series of higher low. Okay, so very clearly it's in a major uptrend, taking towards a major uptrend after slowing down since January 2023 to a low of 2% in January 2024. So this was January 2023, then hit a low of 2% of 2024 and start to shape a higher low since then. So very clearly, the core inflation rate in Japan is picking up. That is actually excluding fresh food but including fuel costs. So if you want to remove this fresh food and fuel costs, we can look at the core inflation data. So the Bank of Japan officials tend to monitor more of the core inflation data because they deem as food and energy prices are very volatile. So even the core rate starts to actually hit the 2% mark back again, and the 2% mark is the desired target level that Bank of Japan wants the inflation rate to actually hover around this 2% level before they actually be more confident in enacting another interest rate hike. All right, so if you look at the core rate or core inflation rate in Japan, that's excluding fresh food and energy, you realize that there's actually some form of stabilization. So you look at the 5-year trend, notice that it's now over here starts to actually tick up. Okay, previously there was this deceleration from 4.3% in May 2023 all the way down to 1.9% in July 2024, and now it starts to actually tick back up again. All right, indicating that inflationary trend in Japan has starts to stabilize at the 2% level, and in fact it starts to gently improve at around this level by looking at the core rate. All right, so with that actually also supports a rather continuation of policy normalization by Bank of Japan. So that could be actually supportive of more dollar weakness against the Japanese yen. Okay, so that is the current data that took shape yesterday. And what's interesting over here is that another particular event that also potentially support further dollar weakness down the road is Bank of England. So Bank of England yesterday continues to be rather staunch on the cautious mode after despite cutting interest rate last month. All right, so over here, Bank of Japan, not Bank of England, pardon me, market expectation, they hold interest rate unchanged, but they actually give out a signal or guidance that they will be rather very gradual to easing. That means, i.e., they are not very dovish as compared to the Fed, because the Fed is still expecting to continues to cut interest rate in the next two meetings. But for Bank of England, they actually signal that it won't rush to cut borrowing costs because they are still very concerned about inflation. Because over here, I want to highlight at this point in time, yes, because over here in the broadcast interview yesterday, Bailey, which is the governor, repeated his steady as we go message and saying that elevated inflation in the services sector continues to pose a risk. So they are still pretty much concerned about one particular component in the inflation metrics, which is services inflation, still rather firm on the upside. So that actually they actually keeping this rather cautious approach. So there could be a chance that because there are still two more meetings down the road for Bank of England, there's a chance that they may not even cut at all going forward in 2024. Okay, they may not even cut. So that actually also was potentially see further dollar weakness down the road, given this rather cautious approach adopted by the Bank of England, okay, against the pound. So it do have a kind of a negative feedback loop with the dollar across the FX market. So the pound would remains rather firm against the dollar, and perhaps the pound also remains rather firm against the euro as well, given the rather much more cautious stance that is adopted by the Bank of England officials in their potential interest rate cut cycle going forward. That means they may start to actually hold interest rate at this level for 2 more meetings before deciding to cut next. It means the next cut may come in only in 2025. Okay, so this is based on their current stance of the Bank of England. All right, so with that actually kind of sum up the key event that has taken shape yesterday in terms of their news release and their impact on their respective various cross asset classes. So with that, now let us now jump straight to the intraday technical outlook on the various cross asset classes, starting with the FX market. So before that, let me expand my screen so that you guys could see the charts much more clearer. Okay, all right. So now let's start with the euro dollar. So the euro dollar continues to push up over here within our expectation and almost come close to the resistance level at 1.12 figure level. So with that, we will use a Titan key short-term pivotal support for today at 111, 111.20, 111.20, 111.20, which is yesterday's V-shaped push-up and yesterday's intraday low as well during the US session. So as long as this Titan key short-term pivotal support holds on 111.20, we will still maintain that intraday bullish bias on the euro dollar above 112 figure level, potentially sees 112.35 next on the intraday basis. However, if price action starts to break down below 111.20, then it will invalidate our intraday bullish bias for today to kickstart another round of minor corrective pullback scenario to expose the next near-term support level at 110.90, 110.70, which is also the 20-day moving average. A breakdown below 110.70 may expose 110.50 next. So that's for the euro dollar. Turning our attention will be the sterling dollar. So the sterling dollar continues to be very bullish over here, in fact much more bullish than the euro. So what we could see over here is that the price action also continues to churn, oscillate very gently within this minor ascending channel over here that I drew from the low. Okay, give me a minute. Okay, I think, okay, 1 second please. Let me adjust my mouse for a while. Okay, give me 1 second. Yeah, mouse is back. Sorry about that. Yeah, so this is the minor ascending channel that I drew from the low of 11 of September 2024. So what I could see over here is that I will use a very tight key short-term pivotal support for today at 132.16, which was also the minor swing low of yesterday. This level here, previously minor resistance break, turns into a pullback support level as well. So 132.16 will be my Titan key short-term pivotal support for today. We will still maintain that intraday bullish bias on the sterling dollar. Next resistance level to watch 133.60/133.80. Break above this level, potentially expose the 1.236 Fibo extension level at 1.3435. Pardon me, 1.3435 level. Right. So, but however, if price action starts to break down below 132.16, that would invalidate our intraday bullish bias on the sterling dollar, and we will see the start of a minor corrective pullback to revisit the 20-day moving average, also confluencing with the minor swing low at 18th of September and 19th of September, acting as a next near-term support level at 131.50. Below 131.50 sees the extension of the minor corrective decline and may also potentially put this minor uptrend in jeopardy to see a deeper minor corrective pullback towards 131 figure level. All right, so that's for the sterling dollar. And also want to mention the sterling dollar RSI momentum remains positive as it continues to shape a series of higher low above the 50 level mark. Okay, so that's for the sterling dollar. Up next will be the Asia Pacific currency, starting with the Aussie dollar. All right, Aussie dollar over here. Okay, give me 1 second. It seems to me that there's something with my mouse. Okay. Okay, pardon me for a while. Let me adjust my mouse. I think it seems to be a bit stuck over here. Okay, my mouse is back again. Okay, starting with the Aussie dollar. Okay, so for the Aussie dollar, what we could see over here is that yesterday we flipped to a bullish bias because we got to respect the current positive price action after that breakout and retest. The breakout and the retest of the 20-day moving average and continue to push higher. Yes, so yesterday it actually come very close to our first resistance level that we highlighted at 68.50. Then thereafter price action pullback. No signs of a bullish exhaustion yet as depicted by the RSI. There is no bearish divergence on the RSI so far so now, and the RSI also continues to inch up higher from a series of higher low over here as well. Okay, so with that, for today we will use a rather tightened key short-term pivotal support level for today, 67.95, which is also this former minor swing high, which is was resistant, resistance break turns into a pullback support now. So 67.95 tighten key short-term pivotal support level. We'll maintain a intraday bullish bias on the Aussie dollar. First resistance level to watch 68.50. So what 68.50? 68.50 it is in fact this. If you go to the daily time frame over here, you're able to see it pretty much clearly. So 68.50. Oh gosh, I think my mouse is hang again. Okay, let me adjust my mouse. I think I've got to change my mouse settings for a while. Okay, hopefully it works now. Okay, my apologies for that, for my mouse. Okay, so this 68.50, right, is in fact this inverted V-shaped swing high. Okay, very clear inverted V-shaped swing high on the 27th of December 2023. Then above 68.15 will be 69 figure level, which is very clearly this minor swing high area. Don't minus rate, the medium term swing high area of 16th of June and 14th of July 2023. So you go to the day hourly chart, you're able to see this 69 figure level as well. And this 69 figure level is very key. It also corresponds to this very long-term circular descending trend line over here. This one in pink, also confluencing with the 69 figure level. If I go to the weekly time frame, okay, you're able to see it from here. Okay, so this is a very clear long-term circular descending trend line of 22nd of February and 4th of April 2022. Okay, so on hourly time, so this should be the two key levels to watch out for on a intraday basis. Okay, 68.50 and 69 figure level. So still maintain the intraday bullish bias as long as this tighten key short-term 67.95 short-term pivotal support holds. All right. But however, if the price action starts to break down below 67.95, if an hourly close below it, then today's intraday bullish bias will be invalidated to see start of another round of corrective decline sequence. In first step, 67.30, which correspond to the 20-day moving average acting as a support level. Then thereafter, failure to hold at 67.30 may expose 66.95 next. So that's for the Aussie dollar intraday technical outlook. All right, so up next will be the dollar yen. So no change on the dollar yen. The dollar yen continues to be resisted at the 20-day moving average that is downward sloping, indicating that the short-term downtrend remains intact, and as well as the 143.70 short-term pivotal resistance that we have on since Tuesday as well. All right, so tested again yesterday, and price action continued to break down. And what we could see over here is that the RSI continues to print a series of lower high. All right, lower high indicating very weak downside momentum. Okay, that means the downside momentum remains intact. But first support level to watch out for on the intraday basis will be 141.40 that managed to survive during a Fed Chair Powell press conference. breakdown below 14140 exposes 139.70, and thereafter 139 figure slash 138.75 support level. So this will be the key short-term support level to watch out for in this potential ongoing bearish bias on the dollar yen. But however, if price action on the dollar yen break up above 143.70, that means we see a price break above with an hourly close above 143.70, then that would invalidate today's intraday bearish bias to see a further continuation of this mean reversion rebound to test the next near-term resistance level at 14540 next. Okay, so that's for the dollar yen. So now turning our attention will be the major stock indices, starting with the Hong Kong 33. So the Hong Kong 33 push up over here, and what we could see, this push up over here starts to form two bearish hourly candlestick over here, a shooting star, and followed by a potential shooting star as well, because the hourly hasn't end yet, but the previous hour formed a shooting star, and upon forming the shooting star bearish candlestick, the hourly RSI has shaped a very clear bearish divergence, so indicating that this push up earlier on from yesterday until today's start of today's Asia session is losing upside momentum. So with that, it also these two bearish elements also form right exactly at a graphical minor resistance level, which is this minor swing high of 19th of July and 20th of July over here. Okay, also very close to this minor swing high of 12th of July at 18,430. So with that, I'll be using this graphical resistance level 18,430, and given that these two bearish element that has taken shape right now, we will flip to a bearish bias for today on the Hong Kong 33, looking for at least some form of minor pullback to retrace this very steep move since the low of 13th of September. First support level to watch 18,200, followed by yesterday's European session low 17,950. A breakdown below 17,950 may expose 17,730 next, which is this former minor swing high. Swing high turns into a pullback support level. However, if price action don't come down and continues to break out above 18,430, then we got to respect this very strong bullish price action on the Hong Kong 33 to invalidate our bearish bias for today and see the continuation of this minor short-term uptrend phase that is unfolding to test the next resistance level at 18,650 next, which is this congestion zone over here. Okay, from 2nd of May and 4th of July, above 18,650 potentially may revisit the minor swing high of 23rd of May and 27th of May this year at 18,980 next, right? So that's for the Hong Kong 33. Now, turning our attention will be the Nikkei 225. So the Nikkei 225 yesterday going to squeeze up over here, and right now it actually tried to play around with this resistance level, former support level breaks, now turns into a pullback resistance at 37,880 slash 38,000 figure level. And what we could see over here is that the RSI has started to clearly display a clear bearish divergence, right? A series of lower high after hitting the overbought level, and right now it exit the overbought level, so indicating some form of weakness that has started to depict in the Japan 225 price action over here. So with that, given that I will actually turn neutral for today on the Japan 225. So neutral between 37,880, a bit of excess, the psychological level, 38,000 figure level, and the lower boundary of the neutrality zone is at 37,410, which is close to the 20-day moving average, acting as a support level as well. So neutral between these two levels, unless price action able to close below, with hourly close below 37,410, then potentially we may kickstart a minor corrective decline leg to expose the next support level at 3790 slash followed by 36,780. But however, if price actually going to push up very strongly, means an hourly close above 38,000 figure level, then we see the price action squeezing upwards towards the next near-term resistance zone over here, which is this congestion area of 2nd of September and 3rd of September, 38,446 slash 38,620. Okay, so that's for the Japan 225. Now moving on will be the major European stock index, one of them the German 30. So what's interesting about German 30 is that yesterday we do have a neutrality stance because of unclear technical element. And yesterday, the German 30 made a fresh all-time high over here at 19,050 level. But after that, during the Asia session now, the price actually gap down and reintegrate back below the previous all-time high, which is at 18,970. So it seems to us that there is some form of hesitant by the bulls to push higher in terms of the latest price action. So with that, I will flip to a intraday bearish bias for today on the German 30 to look out for at least some form of minor intraday pullback on the German 30. So using yesterday's high, we have access 19,050. So 19,050 short-term pivotal resistance level on the German 30. First near-term support level to watch will be at 18,800. A breakdown below it, revisit the 20-day moving average, I think, as a support level at 18,645. We also confluence with the minor swing low of 18th of September. However, if price action starts to push up and have an hourly close above 19,050 level, then today's intraday bearish bias will be invalidated to see the continuation of this impulsive up move to test the next resistance level, which is the next all-time high already based on Fibo extension, the one-time Fibo extension from the low of 11th of September, project it to the high of 17th of September, push it down to the minor swing low of Wednesday, 18th of September. The one-time Fibo extension level will be at 19,230 next. All right, if we start to see a breakout of 19,050. So that's for the German 30. What's up next from the major US stock indices will be the US Wall Street 30. So the US Wall Street 30 continues to actually churn higher and break above our short-term pivotal resistance level that we have at 41,900 level. Okay, break, pull back and go up. So what you could see over here is that at the moment the RSI is not showing any signs of a exhaustion. That means there's no exhaustion sign. Price action continue to shape higher high. Okay, over here now it's just that only it reintegrate back below the overbought zone. All right, previously hit overbought and now it reintegrate back below the overbought zone, so indicating that there could be some form of a minor pullback over here. So what we could see at this point in time, there is some kind of support level that's being held, so that the RSI might pull back towards this support level here. Okay, around the 50 level mark. So with that, we will flip to a intraday bullish bias because there's no clear signs of a bearish exhaustion on the US Wall Street 30. So using this previously very clear range resistance turn into a pullback support now at 41,535 level. So as long as this minor pullback didn't surpass below 41,535 level over here, we will still maintain a intraday bullish bias. We will have a intraday bullish bias, not maintain. We will have an intraday, because today we flip to an intraday bullish bias. We have an intraday bullish bias on the US Wall Street 30. Next resistance level to watch will be at 42,335 / 42,410 level. Above it sees 42,730, which is a 2 times Fibo extension, and as well as the upper limit of this minor ascending channel that I drew from the low of 5th of August. Right, only hourly close below 41,535 will invalidate today's intraday bullish bias to see the start of a minor corrective pullback on the US Wall Street 30 to expose the 20-day moving average that's acting as a support at 41,140. Below it sees 40,640 next, which is the 50-day moving average, I think, as a support level as well. So that's for the US Wall Street 30. So Nasdaq 100 rather mixed right now. So like I mentioned earlier, it can't have a proper breakout above the minor swing high of 22nd of August. So that was the cash market. So in the CFD index will be at 19,900 level, and price action reintegrate back below this level at the close. So printed a high of 20,000 over here. So if you look at the stochastic over here, the stochastic starts to shape, in fact, a bearish divergence yesterday. Okay, a bearish divergence on the stochastic. This is the hourly stochastic. So with that bearish divergence on the stochastic, the RSI didn't shape any over here. So there was a kind of a mixed element at this juncture, given that the stochastic, which is a much more sensitive momentum indicator, shaping that bearish divergence. With that, I will have a neutrality stance for today on the Nasdaq 100. So neutral between 19,900 / 20,000, and yesterday's short-term pivotal resistance level, which is at 19,630, now turns into a very clear pullback support level. So neutral between 19,900 and 19,630 on the Nasdaq 100 for today. All right, so that's for the Nasdaq 100, and you also sum up today's intraday technical outlook on the major stock indices. So with that, let us now turn our attention to the commodities market, focusing on gold XAU-USD. So for gold XAU-USD, still no change. Price action going to push up higher, hitting the first resistance level again at 2,595 already been made. So this one I will remove over here. So the next recent level to watch out for will be still at the 2,600/606 that has been tested during Fed Chair Powell press conference. Came down, hit our short-term pivotal support and rebounded yesterday. Okay, so what I could see over here is that what I could do that I will have a kind of a tighten key short-term pivotal support for today. Okay, this was yesterday's this swing low, and also this former descending trend line now turns into a pullback support level as well. So I will use this level here as my short-term pivotal support level, a tighten one, 2,570. Okay, so I put it at 2,570. So this will be my Titan short-term pivotal support for today. Okay, put it in green, 2,570 over here. Okay, and this will be my normal next support level. Oops. Okay, give me a minute. Yeah, good. Okay. Okay. All right. So tidy up. Okay. So 2,570 Titan key short-term pivotal support on gold XAU/USD still maintain our intraday bullish bias. First resistance 2,600/606. Above it sees 2,615 next. However, if price action starts to break down below 2,570 with an hourly close below it, then today's intraday bullish bias will be negated to revisit this week's swing low level, which is the key event low level of Fed Chair Powell ex-post press conference, acting as a support next near-term support level at 2,545. So, but however, if price action break down below 2,545, then potentially we will see a start of a minor corrective pullback to retest 2,532/2,526, which is very critical. Why? 20-day moving average, and as well as the former stubborn range resistance that is in place since 20th of August and 11th of September now turns into a pullback support level, all right, at 2,532/2,526. So that's for gold XAU/USD. Lastly will be the West Texas crude oil. So on West Texas crude oil over here, price action continues to actually bounce a bit, but still can't break above the short-term pivotal resistance level of 73.15 level that we highlighted. So 72.20, 73.15. So still no change there, using 72.20, 73.15, the upper limit as my short-term pivotal resistance level. Still maintain that intraday bearish bias on West Texas oil. First support level to watch for today will be 69.90, followed by 68.90 next. So these are the two intraday support level to watch out for, 69.90 and 68.90. But however, if price action starts to break up with hourly close above 73.15 level, then this minor corrective rebound pace or phase will extend to expose the next near-term resistance level at 75.07, which correspond to the 50-day moving average, acting as a resistance level as well. So that's for gold. No, that's for West Texas crude oil, pardon me. So with that, that also sum up our intraday technical outlook across the major cross asset classes. So before we go, let's take a look at the calendar. Has BOJ announced the decision yet? Okay, let me refresh up. Okay, the announcement, so no change at 0.25%, no change. So BOJ didn't actually cut or hike interest rate. Okay, so no change, no cut, no hike, 0.5%. So let's see their monetary policy statement. All right, over here, there's this particular website called Forex Live. They tend to report things pretty fast. Okay, is there anything about their widely expected? Okay, the statement is not out yet. Okay, so basically there's some bullet points over here. Inflation expectation heightening moderately. So BOJ officials are pretty much confident about the firm inflation trend in Japan. consumption rising moderately as a trend. That means so far, whatever hike that BOJ has implemented, the BOJ official don't see it denting consumer spending in Japan. And Japan economy likely to achieve growth above potential. So must be vigilant. Okay, this one nothing much, should be the same. They are looking, must be vigilant on the impact of financial FX market move on the Japan economy. So this particular statement also remains pretty much the same as the previous guidance public speeches by BOJ officials. That means stating that before they actually hike rates, they need to look at the state of the global FX, global markets in terms of the volatility of the global markets, be it the stock market or be it the FX market, before thinking about the next monetary policy move, which is a hike, not a cut. All right. So yeah, so that is from BOJ over here. Okay, but nevertheless, if you look at the trend of the Nikkei 225, if you look at the Nikkei 225 very quickly, still no change. Okay, still continues to hover below 14370. Right, but for sure it got to break down below the 14140 before further weakness towards this 13970 and 139 figure level. Okay, so with that, now let us have a look at the calendar again to see what other data to look out for today. So the other data to look out for today that could potentially impact the sterling dollar will be UK growth data, retail sales year on year for the month of August out at 2 p.m. Singapore time. And thereafter, during the US session, 10 p.m. Singapore time, this may impact the euro dollar consumer confidence flash data of Eurozone for the month of September up at 10 p.m. Singapore time. And also at 11 p.m. Singapore time, ECB President Lagarde will be speaking. And that's all about it. Yeah, so no key US data for today. Yeah, there's one particular officer speaking, Fed Harker, but that shouldn't be impacting much of the market. That's very late. It's at 2 a.m. Singapore time. Right. So with that, that sum up today's daily dose of market insights. I'm Kelvin here, signing off. Wishing you all a great weekend and restful weekend. We shall speak again on next Monday. Thank you.